doesn't look like it. You know, I mean, look at today. Energy stocks are up 3%. The last couple of days, energy stocks have actually led as oil's crashed. And you look at those futures contracts like everyone's talked about, the expectation for higher oil's there. The last point I want to point out, look at credit spreads on energy companies. They've come in significantly. They're nowhere as blown out as they were a month ago. What does that mean to the average person listening? It means the bond market's not nearly as worried about those companies going under like they were a week ago or a month ago. So, yes, it's very concerning. But the market is forward-looking. This is the most disconnected market I think I've ever seen in my 22 years doing this with the economy and the stock market. And the reality is it's forward-looking, and it is saying likely higher oil prices and energy stocks. With that little blip we've seen recently, that's a small step in the right direction here in the midst of a really rough couple days for crude oil, obviously.
So Ryan seems to feel that the market is looking forward to higher prices. That's being reflected both in the futures that we're seeing, futures action, and also in the price of those oil stocks. Quincy, what do you think?
Well, you know, to echo what Ryan said regarding the spreads, I also add credit default swaps, and they were stable. You would have thought that over the last couple of days, they would just move up, the expense would just rise on the fear of defaults. Hasn't happened. But one thing that's for sure, it is forward-looking. It's looking at Americans going back and driving. Remember, most of the oil, the good portion of it, over 50%, not 100, but over 50%, comes from gasoline. And as you have nearly 20 to 25% of the population starting to be lifted from the restrictions, you can imagine that driving is going to pick up, and the prices may move up. Another thing, we're watching Germany, we're watching Austria, and of course China. If those economies begin to inch higher without a second wave, that's a big issue for any of the markets. It would suggest that our economy can start to open up, perhaps even with a little bit more strength, leading to more driving. And that's where you're going to get, I see, a pickup in demand. Not to mention China. We're going to be paying, and we are paying attention. One thing about China, I noticed that air quality has started to get worse. I hate to say it. It sounds perverse. It's good news. It's showing that their economy is beginning to turn the corner in terms of activity.